Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday, the 18th of March 2021, and we're commenting on the reaction of gold and silver prices to yesterday's FOMC announcement and statement by Fed Chair Jerome Powell. So let's take a look. Now, yesterday, Wednesday, we published a video entitled 6 Factors to Watch For in today's FOMC statement. Now, these 6 factors were 1. Any change to the 4.2% forecast GDP rate. 2. Any change in the envisaged 2% inflation rate predicted for 2023. 3. When interest rates are likely to rise. 4. A review and reaction to Treasury yields. 5. The Fed's favourable regulatory concessions on banks to extend credit, whether that would continue or not. And 6. Any Fed alteration to the rate it pays banks on reserves. And we've highlighted in that video the details of each of those factors. And we've placed a link to it in the description box below. Well, to some degree, most of these were answered. And Jerome Powell's comments were indeed most interesting. We'll just quote a couple lines, not too many. Quote, "The stance of monetary policy we have today, we believe, is appropriate. We think our asset purchases in their current form, which is to say across the curve, $80 billion in Treasuries, $40 billion in mortgage-backed securities, on net, we think that's the right place for our asset purchases," unquote. Now, this is against a backdrop of US Treasury yields rising sharply in the past month as the economic outlook has improved amid accelerated vaccinations and a $1.9 trillion in fresh fiscal aid, with investors increasing bets that the Fed, though, will raise rates earlier than previously signaled. You see, yesterday, the benchmark 10-year rate climbed to the highest since the COVID-19 pandemic took hold more than a year ago, while the 30-year yield reached its highest level since 2019. Well, Powell merely repeated his view expressed earlier this month, quote, "I would be concerned by disorderly conditions in markets or by persistent tightening of financial conditions that threaten the achievement of our goals," unquote. Now, we ourselves, in yesterday's video, concluded that video with these words: "We do not see too much today which will boost gold and silver prices, and we see a prospect on information that could lead their price to fall, though again, as mentioned in previous videos, we're still more than comfortable with the highs and low trading range we've predicted for gold and silver as published last Saturday," unquote. Well, the response of both gold and silver initially from the FOMC statement or the Fed Chair's statement were relatively mute. But today, Thursday, we did see gold jump to as high as $1,755 by 3 p.m. GMT, though it has fallen back since to $1,736, being therefore just up $8 from last Friday's close. Silver did similarly, but sooner, in that its peak was reached Thursday morning at 7 a.m. GMT, and it touched $26.65, but has since fallen back to $26.03, and alternating during the last few hours between just below 26 and just above 26, and at its current level is just 8 cents higher than Friday's close. Now, the dollar fell on Wednesday, but strengthened today, and the dollar index closed at 91.86. Equity markets in Europe closed up, though in the United States closed down, with the Nasdaq having the largest percentage fall of the 3 main indices, and that was a fall of 3%. The Dow closed down 0.5%, and the S&P closed down 1.5%. Now, there has been some economic data announced today. The initial jobless claims were back up this week, from 725,000 last week to 770,000 this week. And that, without doubt, is disappointing, because there were some expectations or hopes that the figure would have fallen to 700,000. And the index of leading economic indicators for February fell to 0.2%, compared with 0.5% in January. So although gold's initial reaction yesterday was relatively mute, it did then begin to rise and closed higher in US markets by double digits. However, in trading overseas, gold continued to climb higher as it opened in Australia on Thursday morning, but then began selling under pressure as it moved into Hong Kong and then into the London markets. The primary events that caused gold prices to weaken were, frankly, dollar strength and higher yields in US Treasury notes. In fact, the 10-year Treasury yield gained in excess of 9 basis points today, moving the current return to 1.73%, an absolute negative factor for gold, placing considerable bearish pressure on the metal. You see, the problem is that although Jerome Powell has been quite emphatic about keeping interest rates near zero for at least 2 years, it seems that the market sentiment does not agree with his assessment. There are those analysts who believe that if solid economic data continues to be forthcoming, it will force the hand of the Fed to raise rates sooner than they had anticipated. And to some degree, the market is starting to price this in, which is why the yields are increasing. Now, silver markets eventually looked exhausted after its rise early this morning, GMT, but in spite of higher yields and a higher dollar value, it still managed to hold ground. Of course, investors are looking to silver moving forward, entering into positive territory, because as the economy improves, it's expecting an increase in industrial demand. Just goes to show, though, that silver and gold for the moment are at least to a large extent, at the mercy of yields and a moderately strong dollar value. Now, technically, silver remains stuck broadly in the range between support at $25.85 and the resistance at the 50-day EMA at $26.25. The upside resistance level, should this be broken, is seen at $26.70, and the downside support level, should the $25.85 be broken, seems to be pretty strong at $25.20. Analysts are still, even late into the night on Thursday, attempting to decipher the Fed's statement yesterday, and in our view do not really know which direction to jump. What we can say is that Asian stocks are set to open mostly lower on Friday, pressurized by these US Treasury yields that actually have now risen to 40-month highs, and oil prices also have fallen today by their biggest one-day decline since last summer. In fact, Reuters reported just prior to midnight GMT, quote, "The yield on the US 10-year Treasury note on Thursday rose above 1.75% for the first time in 14 months, after the Federal Reserve pledged to look past inflation and keep interest rates near 0% until at least 2024, then ticked lower after the release of mixed economic data. Brent crude futures settled down $4.72, or 6.9%, at $63.28 a barrel, while US crude oil futures settled at $60 a barrel, down 4.60 cents, or 7.1%, unquote. Now, Bitcoin, meanwhile, is up today by $4,600, though it did fall yesterday, and is currently $59,496, some $2,300 off its all-time high, which was reached last Saturday. So we're still holding quite comfortably, we believe, in our price predictions for this week as set out in last Saturday's weekly update, and with no major economic news coming out of the United States tomorrow, being Friday. Frankly, we think we may have to rely on political and or geopolitical events to perhaps dictate any price moves, together with how investors desire to close the week's trading based upon their investments earlier in the week. Without doubt, these higher yields will adversely affect equities and precious metals alike, but there does have to be some respite at some stage. What are your thoughts? How do you see gold and silver moving tomorrow? Will there be any dramatic moves? We don't think so, but who knows for sure? Let's wait and see. Share your thoughts, and if you haven't done so, please subscribe to our channel. Thank you for listening. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.